各位委員
Members, this is the second meeting of the Inland Revenue Amendment Bill 2013 with a quorum, and the meeting is now called to order. I believe you've got the minutes of the meeting held on the 8th of May 2013, and the Secretary has not received any proposed amendment. So, do members want to raise any amendment now? If not, then shall we confirm the minutes? Is it agreeable to you all? Thank you. All right, then. We'll invite the officials in and let them explain to us the details of this Inland Revenue Amendment Bill. To save time, let me tell you the government officials attending our meeting, and they are Ms. Mabel Chan of FSTB, Ms. Shelley Kwan, and also Ms. Crystal Ip, also from FSTB, Mr. Chiu Kok Kit from the IRD, Ms. Mabel May from IRD, and Ms. Pauline Wong from IRD. And we also have Mr. Michael Lam and Mr. Peter C. from the DOJ. Good morning. I've just now approved the provision of a speaking note from the officials. It has just been tabled. So the Secretary, would you please introduce the paper? In fact, at the meeting of the FST panel, we've exchanged our views on this topic, and we've also issued a lecture brief on this bill. Since this is our first meeting to discuss the bill, I would like to highlight major policy objectives of the bill. And the speaking notes have been sent to members. All along, the administration's policy objective is to establish a network of comprehensive avoidance of double taxation agreement. As at the middle of May 2013, we have entered into CDTAs with 29 jurisdictions, among which 11 of them are the top 20 trade partners of Hong Kong. Basing on our experience of CDTA negotiations and basing on the development in the international scene, we have reviewed our exchange of information agreements or arrangements, and we would like to achieve two policy objectives through this bill. Under the existing Inland Revenue Ordinance, we can only enter into a CDTA with another jurisdiction. The law does not allow us to enter into an independent exchange of information agreement outside the CDTA. And since Hong Kong is a member of the Global Forum on Transparency and Exchange of Information for Tax Purposes under the OECD, at the end of 2011, we have conducted a peer review. And I'm glad to inform members that in the first phase of the peer review, the members concerned and the Secretariat of the Forum compiled the report and confirmed that Hong Kong confirmed Hong Kong's progress and sincerity in respect of transparency. And they have also started a second phase of the review, and the persons involved started the evaluation in December last year, and they came to Hong Kong to conduct a site visit in March this year. During that site visit, the Secretariat of the Global Forum indicated that the latest standards of transfer of or exchange of information should have should have comprehensive agreement as well as exchange of information agreement as the two necessary tools. Now, the law only allows us to sign CDTAs, but we are not having any legal framework for any EOI. And that will pose a serious difficulty for us to complete the second phase of peer review. And that may affect our peer review outcome. And that will undermine Hong Kong's status as an international financial center, to undermine our competitiveness. Other tax jurisdictions may also take unilateral sanction against Hong Kong because of our low assessment in the second phase. Now, after 2 rounds of consultation with the FST panel, and also consultations with stakeholders, we worked hard on amending the law and put the bill before members for study. With regard to the progress of CDTA negotiation, we've got some successes, and we also amended the Inland Revenue Ordinance. We were given more room to negotiate with our partners, and we've also got added attractions in the negotiations because of the amendment of law, yet we are facing several constraints. As you all know, the taxation regime in Hong Kong is rather simple. In comparison with other jurisdictions, when signing the CDTAs, we face various restrictions. We'll only limit the CDTAs to income tax within our own definition, and the exchange of information is only limited to income tax. Yet in other jurisdictions, they have many kinds of taxes. Even if we have signed the exchange of information agreement, we may not be able to respond to the requests of our partners under the EOIA or the CDTA. That's a hurdle. And in our consultation, we heard that we are asked to implement more the CDTA negotiation with greater force, with greater strength. We believe that we can expand the scope of the taxes to be covered under the EOIAs, and then we'll be given greater flexibility and will be in line with international standard. In the past, we were concerned about the stakeholders' request that the agreement would not have any retrospective effect. Therefore, we've provided a lot of safeguards. The Director of Inland Revenue, or rather the Commissioner of Inland Revenue, can only provide information if he is satisfied that the information provided is information obtained after, or the information that was generated after the signing of the agreement. But we do face a situation in which the information was produced before the agreement came into effect, and yet the information had a bearing on the tax assessment or tax enforcement activities that took place after signing the agreement. So in responding to such requests, we did face this difficulty. We have consulted our legal advisor to see if we can improve upon the provisions in the law so that we can have some room to respond to such requests. As for the detailed provisions, we'll look into that after we've completed our discussion on the policy aspects. So as far as the wording of the provisions are concerned, they are not very complicated. Now let me now turn to safeguards. In the 2010 round of amendments, we had a detailed discussion on safeguards of privacy, right to know, and the confidentiality in respect of information exchange. The detailed provisions in respect of disclosure of information is now being put in the taxation disclosure of information regulation. The relevant safeguards will be applicable to future EOIAs or TIEAs. Now, apart from complying with the OECD standard in the agreement, which does contain a lot of safeguards, in terms of our disclosure of information regulation, we also have the safeguards. And through this double tier of safeguards, we'll be able to protect the privacy and confidentiality of the taxpayers. As for the timetable, as I've said before, we'll do our best to work with the Bills Committee. We know that the bill will have policy consideration, our international consideration of international obligation and local concerns. The Global Forum in September will assess or will study the peer review report, and the Global Forum has already said very clearly that the legal framework is a very important element in respect of endorsing that report. We'll do our level best to work with this Bills Committee so as to complete the study of the bill as soon as possible. Thank you.
Thank you. Before you speak, members, do you have any declaration of interest? No? Well, I do. I'm employed by the tax department of a law firm, and in fact I am the head of that particular department, and from time to time, on the basis of CDTA, I will provide legal opinions. Thank you for noting. Now, we have 3 members present here today. In order to give everybody a fair chance to speak, I will give 15 minutes for the first round, including Q&A. James To, please. Thank you, Mr. Chair. In the LegCo brief, para 10, concerning the restrictions to disclosure, the non-retroactive effect. It says that for the trade partners, this will create problems for them, and it cannot provide for the effectiveness of the agreements, and of the information arising before the agreements may be related to the administration of the agreement after the agreement, the management of information that was obtained after the agreement. Well, if that is the case, it can have recourse for the past 100 years, arguably, if it has to do with a company. And if the company, if we can trace back to 100 years, then in fact, all that information will have to be provided to the IRD. Well, Mr. Chair, if I can just address the question raised by Mr. James To. First of all, we will have to look at the information requested, whether it is related, and we will have to follow the disclosure regulation that we have first. And secondly, the information has to do with the agreement and the agreement after it has come into effect. For instance, if there were information which is related to the date after the effective date of the agreement, but if the information arose before the effective date of the agreement, then this legal framework will allow us for that kind of information to be exchanged. Now, will it give us access to information going back many, many years? Well, there is the 7-year rule. This is about keeping records for 7 years. So in order to answer directly Mr. To's question, in a very extreme situation, if a company has to keep records, well, the companies have to keep records for 7 years. And in this regard, we are not amending anything. We do not have any intention to change anything there. That is to say, the taxpayers basically will only be required to keep records as prescribed by the law as it is now. Well, I still don't get it, Mr. Chair. Are you saying that it cannot be traced back 100 years, but only 7 years? Now, the taxpayers are required to keep records for 7 years. That's their duty, but I'm not talking about that. What about the IRD? Maybe the IRD keeps records for 70 years. Well, concerning this exchange of information agreement, the requirement for the IRD is to gather information and exchange the information. That's required of the IRD. It's not about the IRD keeping the information as records. Our peers, in requesting for information, the Commissioner for IRD, having received the request, will look at the request and they will ask the taxpayer for the information. So it depends on whether the taxpayer is in possession of the information, whether the information is in his records. Mr. Chair, so you're saying that the IRD will provide the 70 years information if it has a 70 years information. But on the other hand, if it doesn't have the information, they'll go to the taxpayer for 7 years information. Is that right? Well, actually, I think the overseas peer, upon handing in the request, I think Mr. To's question is whether the information will be provided from the records of the IRD. No, what my question was actually, if there is 70 years of information at the IRD, then the IRD would provide that information. If, on the other hand, the IRD does not have the information, they can go to the taxpayer, and the taxpayer is requested to keep only 7 years records, and therefore 7 years information will be provided. Is that what you mean? Well, to answer the question, according to the OECD Information Exchange Agreement, the responsibility is for the competent authority to ask the taxpayer or the organizations to provide the information. No, please answer my question. I'm asking if the IRD has the information in its records, doesn't have to ask the taxpayer, well, is it obliged to give that information? Well, in that case, 70 years. You can provide information for 70 years. Why don't you answer that question first? Yes, please do that. Now, let me clarify the question. Yes, when I said affirmative, I meant that if the IRD possesses information related to a taxpayer, according to our local laws, the IRD will have to go to the IRD to inform him and say that according to the tax jurisdiction's request, the IRD will provide that information. Is this correct? And is this related to the request for information? And upon confirmation of the taxpayer, and only then would the IRD provide the information. So even though the IRD has the information related to the taxpayer, but there will have to be a review process and a confirmation from the taxpayer that this is correct and related to him. Only then would that information be handed over to the requesting party. Mr. Cho, yes, perhaps I'll ask this last question for this round. Now, if the IRD, because the IRD has far-ranging powers, if it can ask not only the taxpayer for the information, there are a lot of relevant parties. Let's say I owe him money and the IRD would request him for the information concerning myself. And is that person obliged to help out? Now, for instance, I would have these 7 years information concerning myself, but if you go to another person who is not a taxpayer, well, according to your files, he's not the relevant taxpayer, and if you request information from him, would he be able to provide information spanning more than 7 years? Let me supplement. According to the ordinance, tax ordinance in Hong Kong, for a person dealing in business, the taxpayer is requested to keep records for 7 years. If the person is not a taxpayer, it has not obliged by law to keep any records. No, this is not about responsibilities or obligations. Let's say you issue a notice to a third party, not a taxpayer, and if that person has 100 years records, and by law, he has no reprieve to not provide you with the information unless he's lying, unless he lies to you. Now, I want to clarify this legal point. Well, concerning this issue, technically, we can look at it this way. The IRD would, well, the authority would have to say who in Hong Kong is in possession of that information, and only then will we request that person to provide that information. And that person will have the obligation to provide that information to the IRD, to allow the IRD to forward that information to the overseas authorities. Yes, I understand that. But for non-taxpayers even, because of this law, if there is a relationship with the taxpayer, then there will be a lot of obligations arising because the IRD may be requesting a third party all the time to provide information concerning a taxpayer. Well, I want to supplement one point. The Overseas Tax Authority, in their request, they will have to specify that in Hong Kong, whom would have the opportunity to possess that information. It is possible for that person to possess information. We will not just go to any person in Hong Kong to request for the information. Well, I understand. Let's say if a taxpayer has a lot of transactions from A to G, and the authority may say, well, there are these 10,000 clients of this taxpayer, and I want the information from all these people for the past 10 years, say. So what I'm trying to say is that this is not just about the taxpayer per se, but really it can create a very busy, quote-unquote, situation where, let's say, if there is a medium-sized company which has a lot of customers overseas and locally, and perhaps in the mainland, and the parent company in Hong Kong, or the taxpayer in Hong Kong, the information will be requested from this company. But on the other hand, a third party, because he's a customer or related party, will have to furnish the information, and therefore everybody can be related and troubled to get the information out. Yes, perhaps we can delve into this issue further. For the CDTA and exchange of information arrangement, we have to abide closely to the arrangement, and that is the overseas jurisdiction will have to specify whom in Hong Kong will have the information, or it is possible to have that information. The IRD will therefore pursue. The IRD will not. Let us not repeat ourselves, but rather, let's say if this taxpayer may have transactions with, let's say, 10,000 persons, and these 10,000 persons will have to be resorted to provide the information. Well, I'm exactly responding to your point, Mr. To. Now, the IRD will have to look at the request from the overseas jurisdiction to see whom are raised as possible persons possessing such information. The IRD is not searching for the information overall. Now, Mr. To, if I can just supplement, what you're saying is that would the IRD follow up with these, let's say, 10,000 people to look for and pursue them for the information concerning this taxpayer? So for these people who are requested to provide the IRD with information, and if the person says, I do not have the time to provide and dig up the information, will you mete out penalties or whatever? Well, according to the legal framework that we have, the kind of situation as pointed out by Mr. To already exists. Now, concerning what arose before the effective date, let's say the taxpayer and these related bodies of the taxpayer, if we believe that these are agents or the bank or manager of the company of the taxpayer, then according to our existing legal framework, there is a 7-year record-keeping obligation. So the IRD would provide safeguards to the taxpayer and the related agents, and the IRD would not, on behalf of overseas jurisdictions, search for any further information. So in terms of disclosure of information, indeed, the effective date, or rather the date is pushed backwards further into the history. But on the other hand, record keeping is just for 7 years as it is now. Let's say an agent who's kept information of a taxpayer for 7 years, that is the existing requirement. Well, answer me the legal issue. The taxpayer will have to keep the records for 7 years, but let's say a client or whoever has a transaction with the taxpayer may keep information for more than 7 years, let's say 10 years, and is he obligated to provide that information? Can you go back and think about this and quote the transaction, look into your records to see whether this can be over and above of 7 years? Now,
the Deputy Commissioner, now under the Inland Revenue Ordinance, there is no retrospective effect. If the overseas competent authority asks for a certain information, the information must be related to a transaction that happened after the signing of after the agreement came into effect. If it involves information before the agreement, the Commissioner, well, let me explain that to you in the next round. You will face severe pressure by then. Mr. Chen Kin-po. Yes, I want to follow up on a point raised by Mr. To. In fact, the Deputy Secretary has also mentioned that you ask the taxpayer whether the taxpayer objects, but what is the consequence if he objects? And also, according to your speaking notes, 11 agreements have been signed with the top 20 partners, top 20 trade partners. What about the remaining 9? What are the reasons for not being able to reach an agreement? And if we change our law, will we be able to reach any agreement with them? And is the present amendment bill helpful in reaching an agreement with them? Let me know. I've asked questions, and the FSTB has answered some questions. If you may refer to your paper. Which paper, please? I think it's the administration's responses to the legal advisor's questions. Is it CB 19881213 bracket 03? Your second paragraph. You have ABC 3 points. Information received by our treaty partners should be treated as confidential. The information would only be disclosed to tax authority concerned with the assessment, blah, blah, blah. A, will only exchange information upon receipt of the request. B, information sought should be foreseeable relevant. How can you make sure that such rules are complied with, or such revisions are complied with? 3 questions altogether. The first question is this: if the taxpayer objects, what will be the outcome? Now, having received the request for exchange of information, according to the law, we need to inform the taxpayers, the nature of that exchange of information, and the purpose of such exchange of information. Having obtained the information, a copy of the information, if requested by the taxpayer, will have to be given to the taxpayer. And if the taxpayer, having read the information, has found that information is related to himself personally, or is not true, then he can object. And basing on this, the Commissioner will decide on whether to amend in part or wholly the information to be provided to the relevant tax jurisdiction. The second question is on reaching agreements with the CDTAs. So far, we have signed agreements with 11 major trade partners. Some of the remaining, such as Germany and Australia, we have already started the first round of probing negotiations, so to speak. With regard to TIE, Tax Information Exchange, they've noticed our constraints, and they are looking into certain enhancements. Among the 11 who have signed agreements with us, some of the countries in the negotiation process did point out certain needs in respect of exchange of information and also text types. The present law is not the present local law is not able to meet their requirements. In the protocols and also in the meeting records, they said that if Hong Kong if Hong Kong made any change in the future, they would like to have suitable amendments so as to enhance the exchange of information. As for the safeguards, in particular with regard to confidentiality, these safeguards are within the model text. And there are specific provisions. If we have the legal framework established, then the agreement will become an order within our local laws, and such provisions will be incorporated in the order, in the relevant order. So we have to comply with the safeguards, safeguarding provisions. In Hong Kong, we do put it in our local subsidiary legislation. If any partner is in breach of this, then we can raise objections with our partner or partners and raise our concerns and ask them to deal with that. And we would like to see that within their legal framework, they do have certain safeguarding provisions. Any follow-up questions? Yes, I want to follow that up. So both sides of will enact their local laws in respect of the CDTAs and TIEAs. Now you say that the taxpayer can object or ask to amend. But suppose he doesn't want the information to be provided to the authority. Can he object to the handling of to the handing over information or exchange of information? No, he can't. Mr. Chen Kin-po, do you have further questions? No. Mr. Yeo. I'm referring to paragraph 9 of the legal brief. Now it said that Hong Kong's tax regime is rather simple, whereas the tax regime overseas countries are rather complicated. The information obtained may be applicable to the tax situation of the taxpayers. Now, if an agreement is signed, and if an overseas authority asks for information, say at the state level or at the federal level, if they ask for information, do we have to provide the information without reserve, even if it is asked at the state level, if not at the federal level? And if the information so obtained is used to prosecute taxpayers, or then will you consider this? Now, the information you provide, information generated after the signing of the agreement, after the agreement has come into effect, but the information can be used to further the pursuit of prosecution, which is in relation to anything before the signing of the agreement. How will you handle that? Say, for example, if a tax jurisdiction has different levels of tax, and then our approach in handling that is that in the agreement we will state clearly the types of tax that will be covered in the TIEA. The tax types will have to be spelled out. If it is at the this is a type of tax at the federal level, and another tax is at the state level, then that will have to be stated in the agreement, and that will be one of the consideration in the negotiation. If the taxation authority asks for information, it doesn't mean that we will provide information without reserve. Now, the obligation is spelled out in the agreement. That is check and balance. In our disclosure rules, there are about 12 criteria for defining what is meant by relevant, foreseeable relevant information. We can only provide information which is generated after the agreement has come into effect. We will not help overseas jurisdictions to take enforcement action or to conduct tax administration activities. We only pass on information. And the information obtained by the jurisdiction, the tax jurisdiction, will do their own tax administration or tax enforcement. It is for them to take action. The IRD in Hong Kong is not a party to that at all. We don't have such powers, nor such obligations. Mr. Yeo. I think the prime concern is how Hong Kong taxpayers can be protected. We have a simple tax regime. Now, in your negotiations, shouldn't you limit the agreement to the taxations in Hong Kong? The tax regime in overseas countries are rather complicated. We hope that you will clarify this point. In your negotiation, you adhere to the taxation regime in Hong Kong instead of widening the coverage of the agreement to cover other taxes. Though you do not help them with the investigation, you do provide information, and information you have provided may be in relation to certain businesses that have links in Hong Kong. Say, they just pay a small amount of tax in in their own country, and yet they pay a lot of tax in Hong Kong. Say, they pay just a small state tax in the U.S., and they made a lot of money in Hong Kong, and they pay tax in Hong Kong. And then by this piece of information provided by the IRD, they charge that company in the United States a heavy tax. So that will create a problem for that company because of this agreement. And they may sue our government for not having considered their situation. So is there any safeguard or protection? I think the Secretary has to clarify this point, whether a taxpayer, because of having the need to pay a higher tax, can sue the government of Hong Kong for compensation.
Mr. Yu talked about the different types of taxes. Well, for the future, the policy is to is the CDTA, and we will be basing our negotiations on the legal framework and also the types of tax that we have here in Hong Kong. But at the same time, we cannot disregard the international standards and also the overseas tax jurisdictions, whether it be for CDTA or in the so-called TsyB, the tier for these two taxation tools. In fact, very few overseas jurisdictions limit themselves to their local types of tax in their exchange under these agreements. So for Hong Kong, among all these international jurisdictions in our provision of tax information, I would say we are the rare remaining ones which limit ourselves to our own income tax information. So if we consider our international position, we have to think about that as well. On the one hand, we have to balance our own concerns and interests locally, but at the same time, at the minimum, we will have to at least give honor to the CDTA framework. So, and for the other tax jurisdictions, indeed, their range of taxes and the tax base are higher or wider than Hong Kong. And given this, with this new stipulation, when we negotiate with the overseas jurisdictions, we will request that the types of tax be specified. And we will then come back to the LegCo for review with a negative vetting procedures. Mr. Chu. Yes, the question was about the exchange of information, whether that would lead to losses on the part of certain corporations. For any cross-border transactions internationally, for most of the tax jurisdictions, the corporations will have to honor the arm's length principle. That is to say, associated companies will have to set up their transactions and costs according to market, including in Hong Kong. If corporations are unclear about this, they can have an advanced pricing arrangement, or in certain jurisdictions apply for advanced ruling system to ascertain that their transactions with the associated companies are correct. The corporations have a number of routes whereby they can determine how the cost is to be allocated or what the transaction cost should be with their own associated companies. But in Hong Kong, because we do not have this independent transaction principle that there is this issue, it is not because of non-exchange of information. Now, perhaps you can provide us with the information under CDTA. If the cost is higher, has to be higher because the IRD says so in a certain jurisdiction, and another jurisdiction that the transaction cost should be lower, would that be adjusted? Well, if the party to the agreement has increased the cost, then of course the taxation would be higher. Of course, tax rate would also figure. There are differences, of course. And the corporation as a whole would bear a different tax burden because of that. Well, in the negotiations by the government, would there be a kind of baseline that we can make known to other jurisdictions? Well, if we do not have this, and this is not made known to the taxpayers, they do not know how the negotiations are conducted with overseas jurisdictions, that would not be good. would there be such disclosure by the government? To answer the question, we, in determining our strategy for discussions and negotiations, we will be adhering closely to the CDTA, and we will be looking closely at the trading partners and what they do. Perhaps there will be certain loss arising for certain corporations, but on the other hand, we will also be looking at the trade between between us and the peers, how there can be avoidance of double taxation for corporations in Hong Kong. So this will be a major consideration. And in our discussions with these other jurisdictions, our baseline will really also hinge on their legal framework. Do they have a reasonable legal framework? And responding to Mr. Chen Kin-po's question, the disclosure procedures, confidentiality, keeping or honoring the confidentiality of our taxpayers, we will be looking at whether the jurisdictions can live up to these minimum requirements. Yes, indeed, we want to make ourselves more attractive and we want to extend our network vis-à-vis other jurisdictions, but our baseline will really be for us to avoid double taxation for Hong Kong taxpayers, to protect their interests in that regard, and at the same time to safeguard Hong Kong in our signing of this agreement, not to have our main interests and areas of concern undermined. Yes, follow-up question. Now, in providing information, if a corporation or group stands to lose, would the government face litigation as a result of that? That was my question. Yes, the Secretary or Mr. Chiu then. Now, concerning the loss, well, it depends on the case, but if I can approach it from a broad stroke basis, the word used was loss on the part of the corporation. But I think for any cross-border corporation, they will have to abide by the laws of the jurisdiction that the corporation operates in. And if the laws are followed to the letter, then the corporations will have to bear their rightful responsibilities. So in that sense, there would not be loss, quote unquote, arising. Now, whether the government will have to bear any responsibilities in exchange of the information, the government had promised another jurisdiction under the agreement, and we have to follow the spirit of the agreement in exchange of information. So the government in that case is only honoring its duty under that agreement, and there will not be any loss, quote unquote, quote, sustained by a corporation because of that. So 2 points. One, there may not be any loss at all. And secondly, if there should be any, it would not be brought on by the government's action. Now, if I can just supplement myself. Concerning the International OECD Model Tax Convention on Income on Capital, if there is any obligation in the exchange of information, the legality of its own laws and ordinance cannot be undermined because of honoring of this model tax convention. So for any jurisdiction, they will have to look at the internal, that is the local laws, and in foreseeable circumstance, that there will not be any illegal behavior leading to any possible litigations or such risks. That's by way of supplement. Yes, declaration of interest. I'm sorry, I neglected to declare, yes, my company would have certain overseas investments. Yes, we have another 15 minutes, Ms. Lee. Yes, why don't you go first, Mr. Chairman? Yes, I will then ask my question first. Just to follow up on Mr. To's question concerning the records of businesses. Now, if the taxpayer himself is requested to keep records for 7 years under the tax ordinance, that's as required by the tax ordinance, but if the administration can explain 51C concerning the business records to be kept, it actually does not refer to only the taxpayer, but if I can use the English version, it actually says that every person carrying on a trade professional.
咁跟住呢，佢就話係要備存7年嘅記錄。即係其實嚟講呢，如果就算一個海外嘅
So that is to say, an overseas jurisdiction signatory to the agreement, and if information is requested, if there is a third party with, say, 100 years of record, and this third party is a person conducting business in Hong Kong, then the person would not have any legal obligation to provide information spanning over 7 years, if I read that correctly. But I will not try to read that on behalf of the government or administration. Would the administration please explain? Yes, Mr. To has just left the room. I would like to, after the meeting, come up with a comprehensive explanation to that question for records. Yes, Madam Secretary, concerning this keeping of records and the stipulation, I would suggest that you provide a document to the panel before the next meeting so that all members would know what the legal viewpoint is. But would you please proceed now? Yes, the response would include the policy as well as the legal considerations so as to be comprehensive. But just to respond on the two stipulations, 51C and D, they are related to taxpayers and financial institutions and the keeping of records, the existing requirements. This existing requirement is 7 years of records to be kept. Now, in the amendment, we have not touched or changed any of this. That is to say, we have not extended the 7 years to any longer. And the persons related would be taxpayers as well as relevant financial institutions. So for other institutions which have kept information over and above of the 7 years requested, the IRD would not, because of this particular stipulation, add to the 7 years or to extend the requirement to keep further records, further to what is stipulated right now. So that is by way of clarification. So let's say a third party or an agent refuses to provide information unless the information is requested under the tax ordinance. Otherwise, these persons would not attract any penalties. Is that correct? Well, for the general response is positive, but we will provide a firmer and more detailed answer to your question, Mr. Chairman. All right, a follow-up question. A competent authority of a signatory jurisdiction issues the IRD with a letter requesting information concerning a taxpayer to be provided for, to be furnished by a third party, and you would inform the taxpayer, would you not, that there is such request for information, with the information being furnished by a third party? Yes, if we receive a request from an overseas jurisdiction in providing information on a taxpayer, we would inform the taxpayer whether the information is to be furnished by the taxpayer or by a third party. Now, for the
Now, will you ask the taxpayer with regard to the information provided by a third party and whether the taxpayer agrees to the information to be furnished to the competent authority overseas? Now, we will issue a document to the taxpayer to listing all the information that is to be furnished and ask the taxpayer whether the taxpayer agrees that it's relevant and whether whether it's true. Well, he may not. He may agree. He may not agree that the information is correct or true. He may not agree that the information should be provided to the competent authority because of trade secrets or because of some other reasons. Under the present tax regime, he asks for a review. Is there any such mechanism that he can object to the handling of the information to the competent authority? Well, in fact, the safeguards are in the disclosure rules. If a taxpayer has received a notice from the IRD with regard to the request for information, and then in fact, the taxpayer will be informed if there is such a request for information. And that also covers information to be asked of or the information to be obtained from a third party. And the taxpayer will also have to be informed with regard to that. And a copy of the information to be furnished with the competent authority will also be given to the taxpayer, and the taxpayer will consider whether the information is relevant and whether the information is true. If certain information touches on trade secrets or other legal privilege information, then he can ask for withholding such information or amending such information. And the Commissioner will consider whether the information will be amended partly or wholly before giving the information to the competent authority overseas. On page 1, the fourth bullet point of the speaking note, it is said that Hong Kong is a member of the Global Forum. We've already had the first round of first phase of assessment, peer review, and the OECD is conducting the second phase of peer review on us. Now, if we fail in the second phase peer review, what will be the actual disadvantages or bad impacts on Hong Kong? Well, as for the consequences with regard to the second phase of peer review, they are now drafting the peer review report, and they are asking for comments from members. Now, when they came to Hong Kong in March, they told us that Hong Kong had a need to provide the legal framework for the CDTA and also TIEA. And if we don't have the legal framework, we may not be able to pass the second phase of the peer review. Members of the Global Forum who have gone through the first phase of the peer review have already got the legal framework for TIEA. Hong Kong is the only one which doesn't have the legal framework for TIEA after passing through the first phase of peer review. So it casts doubts on Hong Kong whether we have the sincerity to achieve the requirements of tax transparency. And the global forum, or rather, tax jurisdictions may introduce unilateral sanction against Hong Kong because of that. They may put Hong Kong into a blacklist or whitelist. If we are in such a list, whether it's black or white, will substantially affect Hong Kong enterprises doing business in these jurisdictions. They may not get the relevant tax concessions. They may even have their transactions being affected. And if our sincerity is being doubted with regard to tax transparency, then we will face greater difficulties in promoting CDTAs or in entering into CDTAs with other countries. If most of the countries in the Global Forum have both CDTAs and TIEAs or tiers, but if we just have CDTAs, we would have great difficulties into entering further agreements. I think you mainly focus on reputation. It seems that we're given a black mark. Now, if a certain trade partner takes our tax sanction against us, what kind of tax sanctions do they have against us if we are on the so-called blacklist? Now, certain overseas jurisdictions may take action against countries on the blacklist. Now, if their enterprises conduct transactions with Hong Kong enterprises, they may ask for more documentation requirements with regard to their enterprises dealing business with Hong Kong. And they may also add a withholding tax or a higher withholding tax. The third possibility is this. Any dealings with Hong Kong enterprises may be included into anti-tax avoidance provisions for controlled corporations. This will increase the transaction costs in respect of dealings with Hong Kong enterprises, and that is unfavorable to Hong Kong enterprises. Now, you've used many technical terms. Can you explain to us what is meant by controlled foreign corporation? We don't quite understand that. As for controlled foreign corporations, it is a common taxation term. Say in a tax jurisdiction, there is a certain enterprise. And if the tax enterprise is that enterprise is controlling an enterprise of an overseas jurisdiction, then the tax will apply to the whole group. So the profits of the Hong Kong enterprise will be included in the taxation, the scope of taxation of that tax jurisdiction. So there will be double taxation for the Hong Kong enterprise. There are also transfer pricing provisions. And overseas companies doing business with Hong Kong companies will also face a lot more difficulties because of that. Do members have any questions for the first round? And then do members have any questions for the second round? Mr. James Ho said that he had questions in the second round, but he's out, so I just want to know whether members have questions in the second round. Mr. Starry Lee, do we need to declare interest? Yes, we have all declared interest. I'm an accountant, and my employer does engage in tax business, but I myself I'm not engaged in tax business. I just want to ask some background questions. I apologize for being late. Now we are the last term of the LegCo empowered the administration to sign EOI agreements. I want to know how many inquiries have you made? Have you received? And how many companies are affected? Do they have strong reactions? I just want to know the actual situation. Let me clarify the point made by the question asked by Ms. Lee. Does she refer to inquiries by local companies or overseas companies? Have you receive any requests for information, for tax information? And how many Hong Kong companies are involved? Have they complained against the making of such requests for information? The Deputy Secretary, can you provide us with information on a year-on-year basis? Since 2010, we have been actively signing CDTAs. So far, we have received 60 such requests, 60. And so far, we have not received any objections or queries from the companies. Any further questions? No. Now, every member has asked the first round of questions. Let us enter into the second round. I will give 15 minutes to each member. Mr. James Ho, your second round. Well, I have forgotten the questions in the first round because I had an interview just a while ago. Para 10 of the LegCo brief. There is a footnote 3. For instance, a UK resident opened a savings account with a bank in Hong Kong on the 1st of March 2010 and received interest therefrom. The tax authority in UK suspects that the UK resident has failed to report his worldwide income because the UK tax regime is different from us. The UK resident opened a savings account on the 1st of March 2010 in Hong Kong. Now the UK authority asked for the statement of accounts in Hong Kong for the period from the 1st of April 2011 to 31st of March 2012, as well as a copy of a signature card for the account in question. Now the law was passed on the 1st of April. The law came into effect on the 1st of April 2011, so the statement could be provided. The statements could be provided, but the signature card was signed before the signing of the agreement. So you did not provide the signature card copy. I think they can impose tax for the account for the savings starting from the 1st of April 2011. I really don't understand this example. Now, if you tell me that the signature card should be provided, then I'll be scared. I'll be scared. It is about taxation. 1st of April 2011. And that is interest income, and it's shown in the statement. The statement, these statements arose after the signing of agreement. You want to use this agreement, you want to use this example to convince us into accepting, relaxing the arrangement. I find it rather scary. I believe you find this example convincing. Now, what's the point of handing over the signature card? Just explain to me why you want to give the signature card. This should be an example for rejecting the arrangement, for rejecting the request. What else the Commissioner to explain?
Yes, we have raised this example to illustrate the different situations. We're not saying that any request will be entertained. The IRD will have to ask the overseas jurisdiction in their request for 1, 2, and 3, why would this be related to their purpose? They will have to reply with regard to the purpose and also the relevance of the information requested to the purpose. Mr. Chiu perhaps can supplement as to what circumstances would constitute relevant. Now, if you can look at the bottom of 3 there, it says that the IRD is only able to provide the bank statements for the period from April 1st, 2011 to March 31st, 2012, but not copy of the signature card for the account in question, even though the latter is foreseeably relevant to a request relating to a period after the CDTA comes into operation. So in this example, you will be providing the information. Isn't it so? No, Mr. Chairman, I have to clarify. I'm saying that even though this information is foreseeably relevant, and you remember in the Bills Committee, according to members' views in the disclosure stipulation, foreseeable relevance will contain 12 criteria. So there is a list of these criteria to constitute foreseeable relevance. We have not mapped out all these criteria here in this example, but they exist. This list of 12 criteria, what was it? That was in the schedule attached to the disclosure stipulation. So the IRD, when they receive any request, they will have to go through this list of 12 criteria. Yes, they have to fill out a template, including those 12 criteria. The request will have to satisfy those 12 criteria. Well, I think, including the chairman and many members here were not on the panel. Perhaps the Secretariat or the IRD can provide us with the stipulation with the 12 criteria. Now, we are talking about levying tax. This will have to be foreseeably relevant because it is relevant to taxation. And of course it is relevant. Otherwise, why would you be signing the agreement? And of course it is relevant to the taxpayer. Otherwise, no information of the taxpayer would be requested. So I do not know what the test for foreseeable relevance is. Now, this example is extremely worrying. I hope you will come up with 10 more examples so that we can all review them. Otherwise, it is very dangerous. You know, even this situation is foreseeably relevant in your mind. And if this is the gatekeeping standards that you keep, it is very worrying. Mr. Chairman, Mr. To raised a very good suggestion, and that is we cannot in this example give all the scenarios. We have other examples that we would like to share with members, and at the same time this foreseeably relevant, and the 12 criteria will be explained in detail to members so that I hope members will set their hearts at ease after that. Very good. Yes, if you can provide us with more examples for foreseeable relevance. Now, this footnote is very simple. It talks about this signature card, but there is no reasoning behind it that's provided. And we are at a loss as to why the decision would be so, as described in this document. If you can provide us more examples and make them fuller, that would be good. Mr. Chair, there is an example here. Well, actually, we don't even have to know what the other jurisdiction is. We don't care whether this UK or any other jurisdiction. So do give us more examples. The worst scenario is that you come up and say there is another test. We have to go to the taxpayer for confirmation. But that is not good enough, because the taxpayer would not be able to argue on the point of foreseeable relevance, but only be able to argue on the point of accuracy or truthfulness of the information. And I would believe in the future this would be problematic. You will be at a wrong, because otherwise you would not be giving us this as an example to substantiate your point. I think really in the future you have to be more watertight in your thinking. I know you're under international pressure, but you're asking for relaxation right now, but this is how you interpret foreseeable relevance in your mind, then this will be highly problematic for Hong Kong going into the future. You keep saying that you are not enforcing recovery of tax payment for any other jurisdictions. But let's be honest, you are assisting another jurisdiction using their legal rights to recover tax payments. This is the honest truth. Now, the other parties, there is a taxpayer, 7 years record and all that, we know. This taxpayer, given this example, if this is looked upon as foreseeably relevant, then the taxpayer can say that for the past 10 years I've had these 10,000 clients and I do not know what is truthful or not. Perhaps you can issue a request for information to these 10,000 people. Well, you may say that, well, that will be a lot of time and effort on my part, on the part of the IRD. Then you may actually have to go back to the jurisdiction, and at the same time, you will have to find out whether there were these transactions, whether these transactions were actually did exist, and would that not be phishing? So this is really a life and death situation, pre and post the agreement. Let's say any transaction between myself or the taxpayer and another person after the agreement date, agreement effective date, is clear for all to see, and the taxpayer would willingly abide by that agreement. But on the other hand, if there is this opening, then there will be a lot of repercussions involving a lot of other people. So I think the gatekeeping has to be very, very tight. Otherwise, it will be very dangerous. All right? Madam Secretary, if you can explain yourself again, because Mr. To was not in the room just now in answering my question. Would you repeat yourself? Yes. Mr. To while he was in the room, while he was outside of the room, Mr. Chairman gave us another chance to clarify ourselves concerning 51C and 51D concerning the keeping of records by the taxpayer. It's a 7-year rule, and the 7-year rule is applicable to any person related to the taxpayer as well, agents. I very much understand Mr. To's question, and you understand the international pressure on us. We are actually being very, very careful in our non-retroactive principle. But while doing so, we would want to allow the IRD to reasonably respond to reasonable requests for exchange of information from overseas jurisdictions. And in our present design of the framework, we are not requesting taxpayer or any other person to provide or keep information over and above of 7 years. They will not have that obligation, and they are not obliged to keep records that are not related to themselves. If the IRD receives a request for the IRD to approach a third party, then the taxpayer concerned will have to be approached first for confirmation before the IRD would approach a third party. If the third party says he does not keep any information or any information above of the 7 years, then the IRD will not be able to request anybody to provide that information. Mr. To asked for us to look at very carefully the legal consideration as well as the policy consideration. We will be doing so, and we will coming back to this panel, to the members and to Mr. To for more detailed discussions. I actually thank members for your being so cautious and careful. We are also being careful in honoring the principle, but at the same time we would want to allow the IRD some flexibility in responding to requests, because globally for such measures, we do not see any country in not honoring the retroactive principle. I would not want to disregard this principle either in our effort to honor the CDT. Yes, when you're talking about the other countries in the retroactive principles, I mean, they, of course, would want to help each other out. They all have these high tax rates and complicated tax regime. But just now you said that you will approach the taxpayer first before you approach any third party. Where is that enshrined, please? Well, Mr. To, Mr. Chu, during the meeting just now, had mentioned, no, I'm asking, is this a self-imposed limitation or is it in the law? Self-imposed limitation. In our own law, the IRD, upon receiving any request, will first approach the taxpayer concerned concerning the purpose of the request. Well, you said notify. You didn't say you need his agreement. No, this is my question. You just now you said that you will approach the taxpayer. Perhaps we should allow the secretary to a full answer. Yes. Yes. We have talked about the disclosure principle point by point. First of all, we will notify the taxpayer concerned. Mr. Chairman, you're repeating yourself. I just want to follow up with a point. Yes, notify, but not to seek his agreement, right? Do you need his agreement before you can approach a third party? If the taxpayer believes that this is not related or not truthful, if the taxpayers claims so, then the IRD will have to reconsider. And if the taxpayer says that this is either not truthful, the information source is either not truthful or not related to him, then the IRD can refuse to provide the information for exchange. All right. So if a third party says, I don't even have transactions with this taxpayer, I don't even know him, then what then? There is no building in the consent here, in the legislation here.
Finally, you will go after the third party if he is relevant. Now you say that nobody is required to keep information for more than 7 years. Now, according to the law, it's not according to policy. If he has the information, or let me put it this way, if the information is obviously more than 7 years ago, if that piece of information is obviously generated more than 7 years ago, will you ask for that? And if he has information, will you issue an order and ask for that? If he has information, if it's more than 7 years, then the commission will also raise it with him. And if he has information, he will provide information to the IRD. We do not ask him to keep information for more than 7 years. But if he does have the information, then he will have to hand over the information to the IRD. I think as a policy, if you are going to relax the law, then you should also put up the fences as well. You should tell your partners that there is a 7-year rule, and we will not ask for information which was generated more than 7 years ago. Even if they ask the information for 20 years, and then you would ask for that, and they would ask tax experts like Mr. Leung for advice. Well, let's don't talk about tax experts. The administration has to consider this issue seriously from a policy angle. If you know that the third party has possessed information which was generated more than 10 years ago, would you issue a notice asking for that piece of information? If you say yes, why would you do it? You need to explain that to us in writing. Mr. James Toh. Let's see whether other members have questions in the second round. I still have questions in the third round. Let him finish with his questions. Yes. Mr. Chen Kin-po and Ms. Dari Lee say they allow you to ask further questions. I also allow you to ask questions. Well, I have an appointment. I will reserve my questions for the next meeting. I still have questions, but I have to go. Okay. That's okay. I still have other questions. I read a newspaper report yesterday. It's about TIR. It's called Harbour Hong Kong. I think many members have received a copy of that newspaper. Now, we adopt a territorial-based tax regime. And we are now providing a lot of tax information to other countries. And that is the TIR framework. Now, when they sign agreements with Hong Kong, they don't need to sign CDTAs. The simple way is to sign the TIEA or TIR. If every country comes to Hong Kong asking for the TIR and nothing else, and then if they don't want CDTAs with us, then this framework will only undermine our competitiveness. So this is really counterproductive, isn't it? Thank you, Chairman, for allowing us the chance to explain that. When we consulted the stakeholders, they said that they asked whether the exchange of information to outside the CDTA will undermine our competitiveness. Now, any negotiation is mutual. we want to promote CDTA. And overseas jurisdictions, some overseas jurisdictions just enter into tiers with other jurisdictions but not CDTAs. In our CDTA negotiations, we've already signed 29 CDTAs, and we are still negotiating CDTAs with other tax jurisdictions. We are at different stages of the negotiations. And we want to highlight our measures in respect of enhancing tax information exchange. There will be an independent independent legal framework on exchange of information. We want to let them see the benefits of having CDTAs and also our enhanced legal framework. And having the tier, the legal framework for tiers, we will be given given the strengths in respect of CDTA negotiations. Our investment partners, such as Germany, Australia, and Russia, we are conducting some probing negotiations with them. And through this enhancement of our legal framework, we want to let them see that we are moving ourselves towards aligning ourselves with international standards. And that will provide the force for a breakthrough in CDTA negotiations. Mr. Lee, I've talked to the administration on my view. Hong Kong is a low tax regime, and other countries are short of money, and they really want to get more money from taxation. If it is not the last resort, if we are not pushed to with our back facing the wall, we really shouldn't enter into that. Now we adopt a territorial-based tax regime. Other countries adopt a global tax regime. But Singapore has a similar tax regime as ours. Has Singapore signed TIEAs with most of the tax jurisdictions? Now, you say there were about 60 requests for information. How many were related to transfer pricing? And how many requests had been rejected because the requests were not foreseeably relevant? And did you reject the request and then refuse issuing notices to taxpayers? Well, I'll ask the Deputy Commissioner to respond. Now, would you give us a written reply? How many requests? How many were related to transfer pricing? Hong Kong is similar to Singapore in terms of the territorial-based tax regime. In terms of signing tiers, they are more advanced than Hong Kong, though they are still slower. They are still slow in this regard. In 2011, they have legal framework for tier, and at the end of 2012, they started signing tier with a tax jurisdiction. In early 2013, they also ratify the agreement. They've already got the framework. Now, apart from Singapore, other tax jurisdictions have similar tax regimes like Hong Kong. And how do they handle TIR? If they have a territorial-based tax regime, CDTA is better than TIR. Can we have a choice? We just sign CDTA but not TIR. I think the Deputy Commissioner can answer the question. Which tax jurisdiction adopts a territorial-based tax regime? I know that there is no pure territorial-based tax regime. I think South Africa, to a certain extent, has a territorial-based tax regime. I know the tax commission, the commission has more information. As far as I know, Singapore and Hong Kong have the territorial-based regime, and South Korea has adopted the resident-based regime. We can also add on this point. Concerning the tax forum under the OECD, it has completed its first round of peer review. The majority of the countries that have gone through the peer review have already got the TIR framework, legal framework. Countries such as Switzerland had strong reservation towards TIR, but they have gradually established the legal regime or legal framework for TIR. Hong Kong belongs to the very few which doesn't have such a framework. Do we have a choice between CDTA and TIR? In terms of strategy, CDTA is the starting point. Individual countries, I don't name names, in talking to jurisdictions, tax jurisdictions, indicated that they had interest in entering into TIRs rather than CDTAs. It is for Hong Kong to consider whether there is such a need. If they don't consider CDTA and we need to exchange information with them, is the option of signing to TIR open to us? In our negotiation, we still have a dozen or so jurisdictions which are considering CDTAs with us. From our perspective, is there any country with whom we must enter into TIR with them? Now, we don't want to have a bad reputation. I think they are more anxious than us as far as entering into an agreement is concerned. From our point of view, we will not say there is a must to enter into an agreement with certain jurisdiction. According to the OECD, the international standard is to have the two tools. I cannot just insist on the preference of a particular tool and refuse to consider another tool. They don't require us to adopt a certain strategy in our negotiation. We can adopt a strategy that suits our own interests. Do members have other questions?
I want to go back to a previous point. The CDTA. What is the discussions with India progressing? How is that going? And India is very large, and I have heard from certain corporations that there is interest there. Yes, for India, in fact, we have come to the almost final stage of discussions, and both sides believe that the stipulations are ripe for signing. But there are certain terminology and wording, very minor actually, that both sides are still considering. So it is really just on the wording, and very soon after that there will be a signing. Would you think that September, October? Well, as soon as possible, we hope. Concerning the wording proposed by the other side, we have made a written response, so we're just waiting for their answer to that. Other questions, please? I would want to thank members for coming and the administration for answering all the questions we have raised. For all the questions raised at the meeting and the concerns raised at the meeting, I would want the administration to provide the written response as soon as possible. Our next meeting for this panel is the 31st of May, 8:30 a.m. Friday. And on the 3rd of June, 2:30, we will have a deputation with body's representatives. Well, if there are no other business, I would want to close the meeting.